Hi, I'm Candace, and welcome back to CryptoVantage. There's a lot of misinformation floating on the web about cryptocurrencies and their capabilities. With so many cryptocurrencies to choose from, it's easy to get lost in just what each of them really offers. In a previous video, how to pick the next big cryptocurrency, we discussed the altcoin market and how to get started investing in it. Today, we will be discussing the second largest cryptocurrency, Ethereum. Ethereum and its token Ether, listed as ETH, have taken the cryptocurrency scene by storm since its launch in 2015, being the number 2 token in value behind Bitcoin at the top spot. All cryptocurrencies are not created equal, especially Ethereum, which has a pretty unique case for itself. Ethereum's blockchain is much more flexible, and it offers developers the opportunity to build apps on the network called dApps, which stands for decentralized apps. You've probably heard of at least one of these in the form of Uniswap, but there are many others, such as Axie Infinity, a blockchain-based video game. As the crypto network continues to expand, so do the number of crypto projects and dApps. Ownership of ETH is required to cover the applicable fees that come with making use of the network. In this sense, Ethereum is simply a currency that gives monetary access to these dApps. ETH is required to interact with any and all dApps in the form of gas. This has since led to Ether being dubbed digital oil rather than digital gold. If we are to carry the analogy further, no one would suggest that real-world oil is a store of value. Rather, oil is a commodity, a means to an end. This is the sort of framework that Ether fits into, rather than being a store of value like its predecessor, Bitcoin. Not being a store of value isn't a knock against ETH or the Ethereum network, as much as it may sound like one. It just means ETH isn't digital gold. It's something much more flexible and perhaps even offers more value to a given user depending on their needs, skills, and what they're comfortable with having in their portfolio. To better understand Ethereum, you first need to understand Ethereum's decentralization. While a lot of young or new crypto investors may assume that Ethereum is decentralized in the same nature as Bitcoin, this is not the case. While it is true that no central bank or authority issues Ethereum tokens, it may not be fair to say that Ethereum is fully decentralized. Surface-level explanations make the claim that Ethereum is decentralized, and it certainly has that appearance, but investor and podcast host Brad Mills has an analysis that proves otherwise. Mills' strongest argument is that the Ethereum network is set up in such a way that it will recreate the Wall Street-style financial structures on a blockchain. While Ethereum and other decentralized finance applications built on the network claim to offer governance opportunities, the truth is that tokens like Compound usually have a distribution that looks like the graph below. Despite the claim that such a token has tens of thousands of holders, actually only around 100 people control 96% of the tokens, which is a very poor case for any sort of decentralized governance structure. Ethereum founder Vitalik Buterin still holds significant influence over the development of the network. So do a handful of the development and DeFi teams such as Go Consensus, Ethereum team, Gitcoin team, and Uniswap. Keep in mind that Ethereum's level of decentralization is at a point of contention between Bitcoin maximalists and Ethereum supporters. But at this point, it's fair to say that ETH's level of decentralization is different than Bitcoin. Ethereum is generally the platform of choice for decentralized finance applications, which offer an expanding range of financial products based on decentralized blockchains and smart protocols. The launch of Ethereum 2.0 will also be a big boost to Ethereum's price. Due at some point later this year, the platform will see the Ethereum blockchain move to a proof-of-stake consensus mechanism. Basically, rather than solving resource-intensive computations to validate blocks, Nodes will validate them by staking ETH. This will not only make Ethereum more efficient and scalable, but it will have an effect on the Ethereum economy that should squeeze ETH's price upwards. Do you think Ethereum is as undervalued as some users in the crypto community believe? Let us know your thoughts in the comments below. And there you have it, a brief introduction to Ethereum and a discussion of what's to come for the second biggest cryptocurrency in 2022. If you found today's video useful, give us a thumbs up, hit subscribe, and head over to CryptoVantage.com for even more news, resources, and information.